I tell you, it's insane. If you buy any time in 2021, buy anything with your eyes closed, you can easily make like double easily.
My name's Desmond. I run an investment research firm, and at the same time I also run an investment Discord for traders.
Hi, my name is Gary. I'm a health service researcher. I do research into diabetes and complication of diabetes. I'm also a medical doctor by training, but currently because of COVID, I'm not seeing patients right now.
I'm Nicholas. I am in the digital marketing industry and I just started investing Q2 of last year ever since there was a Moomoo app.
I'm Remus and 23 this year. So I'm currently schooling. I'm managing a swim school as well as dabbling into the real estate industry.
We do have a SG stock group for doctors because I think most of the time the stereotype is doctors, lawyers are very poor investors. But a lot of doctors, just based on salary itself, I think for example GPs for example, they don't really earn that much. Yeah, more than an average person definitely, but they do still need to grow their portfolio.
Long story short, when Futu first came into Singapore, I actually created like a Telegram group to build a community here. Yeah, it's me.
You can look at it from two angles. I would say fundamentally and technically. So what I mean by fundamentally is that this stock you originally bought. The reason you bought it, is it still true? For example, right, Apple. Right? Maybe if you bought Apple because you thought, you love the way they innovate, then one day they decide to go into groceries, right? Selling apples. So imagine if they start doing that instead of their original business model. So if there's that radical change in their business model, what they stand for, then that might be a good time to sell.
Well, I think the worst time to sell the stock is when you're losing. So I think the best time could be any time actually, because you never know. Just go with your gut. As long as you're not selling when you're making a loss.
I've always believed that one should not even sell. You only buy the stock that you want to keep for your entire life. So you only sell if fundamentals change or you find a better opportunity.
I'm quite conservative. Usually what I'll do is, if I buy enough, what I'll do is when the price double or triple, I'll sell half. That will actually lock in some of my gains and then I let the remaining go.
From a technical perspective, you might notice that Apple, if I'm not wrong, has been repeatedly failing to break beyond this 180 or 181 level. Every time it reaches there, it drops. It reaches there, it drops. It reaches there, it drops. For the past 4 times, he has failed to break past this level. There's a higher chance right now, that it might drop again, right? So that might be a good time for you to actually sell some positions.
There's no hard and fast rule on that. I always believe that to sell a stock, you have to know what you're actually doing, and more importantly, to know the reason behind it and not based on emotions.
Say false. The word profit proof kind of suggests it's binary, yes or no, 100% or 0%. And in trading, you need to see it in the form of a probability. What you're looking to do is just to get as high a probability as possible.
Alright, so 2021 was a phenomenal year for most of us, including myself. I tell you, it's insane. If you buy any time in 2021, buy anything with your eyes closed, you can easily make like double easily. 2021 itself is about 200%, just that year. Yeah, but from the start till now, it's about 40.
Average meaning the total return, or talking about actually it's the total return, right? A little bit shy of 90.
5% would be a good estimate.
I saw about 3 to 5%, and I think that's quite good already. Yeah. It's actually amazing because I just started with a very small amount. I just put in about 5K.
It's because that year it actually created opportunity, but people see it as crisis. That's when smart people enter.
Previous guest yesterday, he's 23. Yeah. He gave us our portfolio, his portfolio returned 200%.
Wow.
Yeah.
Okay. It can happen, yeah. In theory, yes, but I think in practice it's very different. I believe you can give someone the blueprint to making money. You can give 10 people the blueprint and all 10 of them will have different results. A lot of it boils down to, I feel, is the risk tolerance level, the trading psychology of a person, right? For example, for me, you trade throughout the day kind of thing. I know that once I hit the night, right, I can't hold my trades overnight. I will actually wake up and my phone's right beside me. I just take a look and see if I made money or not. And that affects my sleep. Some people can just sleep through it. When it comes to this question whether, can people generate the same returns, in a perfect world, theory, yes, right? But in theory and practice, different, yeah.
Yeah, so if the stock plunges, I think that's a very good question, right? It's like whether you should buy it or whether you should hold it.
just hold it right. You don't need the money right now, and if you are young, there's no regrets. Yeah, even if you get broke now, I tell you, it's good to start all over again. Yeah, especially at a young age.
It plunges for a reason. You know, price don't just plunge for no reason.
Well, that's very difficult questions. Firstly, you must ask yourself whether the assumption for you buying a stock, does it still remain? My strategy is probably not to buy it at one shot. I go in about 5K or 10K each time.
Look at the reason why it plunged. If Apple plunges because they decide to, turn into a grocery chain, but we don't want to be averaging into a grocery store.
I don't really dollar cost average my holdings, and when I want to sell, I sell it right straight away. Is because I find a better opportunity, I move on fast. Opportunity cost matters a lot when it comes to investing, be it crypto, stocks, or bonds.
Let's just say you are dollar cost averaging out of a market, right? If the entire fundamentals of the company is different, yes, get out. But we're talking about dollar cost averaging or getting out of a trade. I believe this is where you need to look at stuff like risk events, right? For example, Apple product announcements, right? Things can get pretty crazy during that point of time. If you already made a chunk of money and it's right before this key event and you can do without the volatility, then it might make sense to kind of dollar cost average. Take out part of your profit.
That's a very good question. Why do universities in Singapore, or because I come from Malaysia, why do even universities in Malaysia don't teach? That's a very good question, because I felt that we should have been exposed to all this when we were in school, so that we know we can make better decisions right now. I guess the government is playing very safe, not to expose and not to give the wrong mindset that we don't need to work, and investing will just give us money.
Why universities are not teaching them is because no one in the right mind, I believe so, would go in to become like a lecturer over there to teach people how to get rich. Otherwise, they will be like their competitors. Universities do set the standards right to learn about accounting, numbers, stuff like this, which are crucial. But at the same time, not everyone is into investing, and not everyone wants to get rich. Yeah, some people just want a simple life and stuff like this. When it comes to university, mix with the right people, and I always say that whoever you mix with is who you'll become.
I don't think it's just selling stocks, it's even buying stocks. I think it's not just university. I think as a whole, financial literacy in Singapore, actually worldwide, is actually quite poor. First thing, you need to have the interest. A lot of people are not interested in this.
Good question. What universities do well is that they do teach you the various aspects of a business, right? For example, a SWOT analysis, strength, weakness, opportunities, and threats. You're analyzing a company and you realize that it has zero strengths and a lot of weaknesses, right? A lot of threats and almost no opportunity. In some way, actually helps you evaluate whether this company is worth investing in. The education system per se doesn't need to teach you about financial modeling. There are enough of that out there, just like click a button, you can get all the financial P ratios and stuff like that. So if you can go through that, and that is enough, you don't need to put an entire module in school teaching about that, right? What I feel is more important is the schools train your logical thinking.
Can selling stocks help me retire early?
Coming from a very conservative background and all, I don't think you can, unless if you buy now and hold it for the next 20 years. Like for example, S&P.
Yes. A pretty high degree of confidence, I can say yes. The important point there is, comprehensive, needs to be balanced, especially when you take into consideration the compounding returns over the years, and it can actually help you retire early. Yeah.
Where are you right now in that? Are you on the way to that kind of trajectory?
Well, I could retire right away if I want, but it's different goals. I feel it's different goals. Some people prefer to be semi-retired because they're doing something they like. Not everyone wants to just retire and just sit down and watch Netflix all day. Digress a bit, which I encourage people to do. Don't just hold your positions and just for retirement, right? Take out bits and pieces of it and use that cash, right, to go buy a meal. Use that cash to treat your family to a meal. It actually brings meaning to investment.
The average salary, I guess, when you're just coming out, if you're university students, probably is 3,000-4,000. I don't have the latest figures, but probably 4,000-5,000. I heard there are certain high-tech companies can pay 6,000-7,000 for a fresh grad. Let's say you have no student debt, then you can actually save majority of your savings. But even then, it takes time to accumulate money. Yeah, so being a millionaire from scratch is a bit difficult. You probably have to do a business.
Depends on what you're investing in, right? Investing the blue chip stock, the safer stuff. You can make money, right? But don't expect to be a millionaire. It's tough. right? You're not starting off at 900,000 and hitting a million, right? You need to make a substantial amount of money. So the compounding effect, right? Even over a short period of 10 years and stuff, right? You cannot just be looking at, I'm going to make 3%, I'm going to reinvest this 3%. It's not going to get you anywhere close to that. You need to look for higher risk stuff, the moonshots, right? The crypto, the stuff that if you get it right, it can really take you to closer to the million target. The riskier investment, you can just as easily make a lot of money, you can also just as easily lose a lot of money.
If you have a stable job, let's say you're in the government sector, you want to invest in something risky because you have a stable job. Similarly, if you have a risky job like an entrepreneur with a startup, you want to invest in something safe. In Singapore, your CPF is like kind of like your fixed income. You get a fixed income fixed interest every year, so you tend to be able to take a bit more risk.
Definitely you can if you know what you are doing, and it depends on what you buy. At the same time, do you have the discipline to hold the stocks and to hold the crypto or whatsoever you are doing?
Are you going to be a millionaire or a billionaire by 30? Is that your trajectory?
Alright, so definitely a millionaire before 25 and a billionaire by 30.